Hunter, Head of Markets, and welcome to our look ahead for the week commencing the 17th of May. It's been a fairly turbulent week in the markets. The spectre of inflation has risen its head again and it's become front and centre. Some noises from the Federal Reserve towards the end of the week may have assuaged some concerns, but the fact remains that the debate will rumble on. There are concerns around labour shortages, blockages in the global supply chain, and of course we've had a spike in the oil price following that cyber attack on one of their main pipeline operators in the States. At the same time, the pressure on growth stocks and big tech in particular has continued. In the UK, on the other hand, it's fairly kept its head above water. It's still attracting some institutional overseas interest on the basis of valuations and the fact that there are so many cyclical sectors within the Premier Index. So that's one also to keep an eye on. So in the year to date, we've got the Dow Jones up 11.1%, the S&P 500 up 9.5%, the Nasdaq is now just up 1.8% in the year to date, and the FTSE 100 up 8.5%. Turning to next week, there's some corporate numbers to look out for. Full year results from Vodafone are due, share price up around 15%. In the last year, but often seen as a jam tomorrow stock on a fairly perennial basis. On the plus side, the acquisition of Liberty Global's German assets, which now account for around 30% of revenues, is looking like it's going to be a promising contribution. On the other hand, the complete lack of travel has obviously hit roaming revenues for Vodafone, while at the same time it's been reporting lower handset sales of late. Also, full year numbers from Royal Mail Group. This is a share which has risen by 203% over the last year, although to put that into context, if you go back 3 years, the overall picture is still down 18%. Even so, it had a fairly bumper Christmas. We'll be looking for operating profit somewhere around £700 million, with the central story remaining, of course, that letters and cards are in terminal decline, but much of that has been picked up by the inexorable rise of online shopping, and that's been good for its packages and parcels business, and in particular its international subsidiary, which is GLS. And finally, Kingfisher will be reporting first quarter numbers. Again, this is a stock that's on a roll as a result of the pandemic. Shares have risen by 109% over the last year. What will be interesting here is if we're seeing any switches in consumer behaviour. Obviously, we've had a DIY boom. Is that bubble starting to burst as people start to look ahead, plan ahead and spend ahead for holidays later in the year? At the same time, it had been showing particular strength in its subsidiaries, so something to keep out for as to how trading is going at B&Q, its previous jewel in the crown, Screwfix, and also its French arm, Castorama. Thank you for watching. Have a great week.